Hello, hello. Thank you. Thanks. My name is Eddie. I'll be your moderator today, as far as you understood already. We are talking about crypto finance today with these wonderful speakers. And before we dive into the discussion, maybe you guys can quickly introduce yourself.
Okay.
Starting with Medina.
Hello, everyone. My name is Medina, and I'm head of BD in Toobit Crypto Exchange. So I'm glad to see you, all the guys, and let's talk more about crypto, about our topic, Revolution Crypto.
Perfect. Hi, everyone. Michelson. I'm leading strategic territories for GK8. GK8 is an Israeli cybersecurity company. What we do is that we develop an end-to-end self-custody solution that includes a very unique deep core vault, a core vault, and an MPC. And our solution is covered by the highest insurance in the market globally, $1 billion of insurance. There are institutions that is working with us. So it's a pleasure to be here. Thank you.
Good morning, everyone. My name is Chessé. I work at Fireblocks. We're also a cybersecurity company. I'm leading our sales efforts in France, Middle East, and Africa. And at Fireblocks, we basically provide a technology for customers to self-custody and secure all of their digital asset operations, from treasury management, wallet infrastructure, tokenization, end-to-end. Very happy to be here this morning as well.
Hi, everyone. It's a pleasure to be here. I'm Rob McCracken from Alchemy Pay, ecosystem lead there. So I'm in partnerships, growth, a little bit of PR, spokesperson role as well, and we're a fiat crypto payment gateway. So that's on and off ramps, crypto funded MasterCard, NFT checkout, and crypto payments as well. So yeah, looking forward to the discussion today. Thank you.
Thank you so much for the kind intros. So before diving into the discussion, I want to kind of set up the tone a little bit. And as the foundation of our today's discussion, I took the latest speech of Fabio Panetta, who is the executive, one of the members of the executive board of European Central Bank. And just before asking questions and starting the discussion, I want to set up the tone a bit and tell a few things that he kind of mentioned in his latest speech, as we're talking about crypto finance, right? So what did he say? Crypto assets have been promoted as decentralized alternatives, promising more resilient financial services. However, the reality does not live up to that promise. The blockchain technology underpinning crypto assets can be extremely slow, energy intensive, and insufficiently scalable. The practicality of crypto assets for everyday transactions is low due to their complex handling and significant price volatility. To address these drawbacks, the crypto ecosystem has changed its narrative, favoring more centralized forms of organization that emphasizes crypto speculation and quick profit. So this is briefly on the latest talks, in different regulation bodies and by really trustful people. So I guess one of the foundation of these talks is the security issues, right? Many hacks, a lot of really stolen funds and stuff like that. I know that among our panelists today, there are some people that really address the security issues. So what are the latest tools and new ways to build more secure crypto finance products and ecosystem, in your opinion? So what should we do to increase trust and security in the crypto finance?
Can I talk about Toobit, since I'm from crypto exchange, which is always having, to be honest, but some reviews regarding this, some scam projects or stolen funds. So the main part in Toobit is security, because we have a third layer security system, and we focus on our users' security digital assets. So we have 3-layer security system and a comprehensive system audit, which provides to our users unrestricted access to see all of these transactions, all of their assets, and to make sure that they will enjoy efficient and secure crypto environments. So I think it's a crucial part actually in crypto world about security. And like if we talk about Toobit is all about transparency, security, and about liquidity. So I think everyone who just will explore and check more about Toobit will find that we are 100% guarantee our security part, since our project actually background is professional and lead generators from Bybit and Hobby Global. So that's why we are really emphasizing this part and always working on that to provide the best security for our users.
Thanks, Medina. So you've mentioned the 3 layers.
Yeah.
Okay, that would be great to know more about how it's really built, you know, and what are these layers, what are they really based on. I don't know, maybe Rob, you have something to add to that, because Alchemy Pay, I mean, you're dealing with payments.
Yeah. Okay, yeah, so Alchemy Pay, as a payment gateway, so a fiat crypto payment gateway, it works a little different from exchange. So it's really a non-custody purchasing solution. So, you know, you'd have the checkout on a platform, on a wallet. I mean, we do work with exchanges, and exchanges have their place and their strengths for sure, being able to sort of move funds from different chains very easily. I mean, this is a fantastic thing for traders. All sorts of reasons why people need exchanges, but also, you know, if you really sort of dive into the Web3 ethos, then that idea of having custody of your own money, your own funds is really important. And a payment gateway such as ours, you know, among a variety of different solutions, but the usual thing would be an on-ramp where we're a licensed payment provider, seeing the fiat aspect of the transaction from end to end and licensed to do so. And then once we've received payment, then we'll source the token, source the liquidity, and send it directly, usually directly to the user's Web3 wallet. So, you know, as a firm that doesn't custody tokens, you know, we already avoid a lot of the issues. You know, something like FTX just simply is not, you know, relevant to us. You know, we work on a different model. I think that really supports the Web3 ethos if people really want to grasp hold of that. I do still agree that, you know, exchanges are a fantastic place to begin your sort of journey with crypto and blockchain. And, you know, a lot of versatility within exchanges and a lot of features and options. But yeah, a payment gateway works in a little bit different way. And I think it's more easy to have a secure transaction and feel comfortable that you have the custody, the assets in your control.
I think we can agree that security is like absolutely critical for any digital asset projects.
Yeah.
We believe at Fireblocks that no security is unbreakable. So we've basically built a zero trust architecture with multiple security layers and different ways for institutions to run their operations. Bottom line is that it's not something you can delay or not make it a priority in your projects. Whatever your project, whether it's a Web3 crypto native project or the launch of a stablecoin or a crypto buy wholesale use case for a bank, security, managing these new types of assets is absolutely critical, and that comes top of mind for any institutional players moving into that space.
I'll just echo what Alex said. Definitely you have to start with security. It's the building block for everything. After you have security, well, if you're not taking security to extreme from day one, we saw so many tokenization projects falling out or getting hacked in the first day. So definitely everything in the digital asset space have to start with security. And that's why in GK8, we're taking we put a lot of, I would say, a lot of our weight on transparency and security in the manner that we're not trying to mitigate the risk. One of our key points is the deep cold vault that eliminates all risk. It's actually the only solution in the market that enables you fully offline to fully create, sign, and send blockchain transaction, and it's covered by the highest insurance in the market, as I said. And we see many tokenization projects starting and launching the tokenization from our platform in day one, making sure that they really don't have any backdoor, which is crucial when you're building a business, a successful and scalable business.
So basically you're doing it off-chain.
We have 7 patents on our technology, and our Deep Core Vault is the only solution in the market that enables you fully offline to never, ever receive any digital input, to fully go to the Core Vault, generate, sign, and send blockchain transaction without ever receiving any digital input through all the life cycle of our platform.
I guess that's one of the points of our today's discussion, not just security, but decentralization of the crypto finance because of the security as well. But that's the next question of mine. Before we step into that, so we're talking about security, right? So you guys at your company is doing, building different layers and stuff like that. But as a regular crypto user, right? I'm not a corporate. Right? I'm just a regular crypto user. I see that, you know, I have some crypto on my Binance account or some non-custodial wallet, trust wallet, whatever. And I'm using a DeFi protocol, which I hacked like, I don't know how many times per day. So what's, okay, maybe per week. Okay, so what are, I mean, you as security and, you know, crypto experts, what is really should be built in place or, I don't know, regulated, or what should be done so that, you know, we kind of a step away from that situation where crypto is taken as some scammy, always rugged and hacked place, right? So what level of security is it on the you know, on the protocol side, or security is on the user side, right? So where is this balance, and where are we really going? What should we do to kind of fix that problem?
So you're talking about completely 2 different stuff, because for example, in the protocol, let's talk about security of the exchange. So for example, here in Turkey, it's an amazing example, because you really see the regulator stepping in saying, we had an exchange, 2 billion got stolen, let's change it. And now the regulation comes and says, well, everything needs to be here on-prem. Everything needs to be transparent. There's a certain processes that need to be in place. So you really see the Turkish regulation taking an amazing approach by really stepping in and putting some right guidelines in place. When you're talking about protection of protocols, it's also a completely different game, because how did they started the smart contract? Where did they launch it? Who's managing the smart contract private key? But that's a completely different game. Now, will the regulator come and says, you cannot work with those and those blockchains? I don't think so. So you can protect up to a certain level, like the Turkish regulation is amazingly doing, but in terms of the protocols of security.
So you're saying that it's more on the regulator side?
No, I'm saying that,
I mean,
you ask if an individual, where can he buy crypto? How should he do it in a secure way?
How can
so
they protect themselves? Yeah.
Yeah, so I'm saying here the Turkish regulations really try to put processes in place to make sure only trusted institutions like big financial institutions can actually do custody. Well, that brings the security to the custodian space. Protocols security is a completely different game that different due diligence need to be done.
But I think to echo what you just said, I think exchanges and central marketplaces could also put in place like best practices to ensure that there is security around the operation that they're running. I mean, there are multiple pillars, right? But one could be choosing who is operating their product internally, who has what type of roles for what types of operations, what is the governance mechanism internally. Another middle layer would be, what are the different counterparties you're working with? Are we able to map who has access to your systems, how and why, under what circumstances? So there are many different aspects. And the last one, I think, which is quite important, is plan for the worst. So basically prepare a response in case something wrong happens. And we've seen examples with crypto exchanges or actually chains being hacked with an enormous amount of money at stake, and actually the overall money that was stolen was actually limited, specifically because the exchange had planned for such situations with a response plan. So I think when we think about the overall security for users in that space, making sure that there are best practices in those marketplaces actually is quite critical to make sure there is security for the users.
Yeah, and I think ultimately, yeah, I totally agree. I think ultimately it is up to the industry to regulate itself and to prove itself. And, you know, we lost a lot of confidence from everyday outside observers at the end of 2021. You know, you continually read about hacks, particularly in terms of cross-chain bridging. So, you know, we can talk about this as, you know, still the teething problems of a new technology that's still emerging. And I feel fairly confident that we will see, you know, improvements year on year in this way. But ultimately, it is for the industry to to fix those problems and make sure they don't occur rather than regulate. We would rather that than regulators step in, obviously.
Yeah, and also if we talk about like users, which is always, like I think each of crypto exchanges, your guys' projects will have users who is trying to like send a lot of bad reviews and complaining about service sometimes. So I'm just talking that user also need to make sure where they invest their money, their assets, and check more about the projects which they're like wanted to invest their money, or they just want to try for like their first trading session. So basically we always suggest to our new users, our clients, to check more about, for example, Toobit or other project which is just listing, because you need to know all the like inner part of the projects to make sure that your digital assets will be secure, because like day by day we're having new projects, new NFT projects, new crypto exchange, and for sure if you're earning money, want to earn more and want to invest in crypto, you should learn more and learn day by day, because crypto world, it's going very fast, and I think you should be always go with the flow and just learn more about it to make sure that your assets will be secure and you will not lose your money in the future. So, but I'm always telling even to my friends or my colleagues that it's only your responsibility. You cannot, judge projects or crypto exchange. You should take responsibility that you put your money somewhere and you are having some expectation, right?
Talking about that, I have a friend who had money in different wallets. One of them was a non-custodial wallet, which was hacked. So the question here is like, we were talking about regulation, right? So do you think it's the right way to regulate everything, like regulate non-custodial wallets, exchanges, wallets, like everything? Is it the right way? And I mean, maybe it's the inevitable way and where we are coming to, right? Because you've mentioned the hacks of the Turkish exchange and all of these things, and the government stepping in. So do you think it's the right way to regulate just everything like the traditional finance?
It's not a right or wrong way. It's just that I think, generally speaking, we need regulation for broader mass market adoption. Essentially, we need the banks to start offering crypto services, and that will only ever happen if there is a proper regulation. And we've seen it happening in many different places, in the UAE, across Europe, and hopefully soon in Turkey. But this is a requirement for mass market adoption. We need regulation. We're not regulated as such at Fireblocks because we provide technology for banks to get secured and get regulated, but we are pro-regulation because that is a requirement for institutions to move in that space and foster broader adoption.
And I think regulation brings trust. Regulation makes you feel comfortable knowing that, yes, the central bank did some due diligence, not that I'm saying the central bank always right, but you put the right processes in place to make sure that FTX will not happen here. Yeah. Will that for 100% actually eliminate that? No, but you can try to mitigate that as much as possible.
So we've mentioned two things here. One of them is take your own risk, do your own research. Another one is regulation. So in traditional finance, everyone used to kind of be irresponsible, right? So if your money is in the bank, then it's in the bank and it's bank's responsibility to keep it safe. Here, we have regulators coming in who are responsible for something, but at the same time, you should manage your own coins, which is kind of a, goes in contrary with traditional understanding. So based on that, I guess, I mean, at least that's my thought, that with regulation comes centralization. So what do you think, what risks do you see from the growing centralization, current centralization of the crypto market, right? Because we have Binance, we have Coinbase, these are like, the big giants, the centralized exchanges. So what are the risks, right? And do you think more centralization is coming into the crypto finance ecosystem?
I think, sorry.
No, go for it, go for it.
I definitely think centralization is coming. Yes, Binance is leading now, Coinbase is leading now, but will they prevail? not sure I'll put all my bets on Coinbase. I will put my bets that centralization is coming, with regulation is coming, big financial institutions will be the leading custodians. We see it, and we see it globally. You trust your bank with your fiat money, you will trust your bank with your crypto. Again, regulated, got the right processes in place, know how to protect very large amount of assets. So yes, centralization is coming, and I think banks will be leading custodians. Do I think they would also be the one who's you're doing trading with, or you get? No, I think it will be maintaining kind of like the same investment houses you have today, hedge funds, family offices, but the custodians will be the financial institutions. Again, that's only my uptake.
I do think at the same time, you're absolutely right, but I think at the same time we are seeing on the other side still more and more progress in terms of decentralization. So, over the last couple of years, DAOs have become a big thing, have become something that's been explored and being explored thoroughly, like how is this possible? How can we deal with these issues, these obstacles? So we're seeing progress there. We're seeing progress in terms of ZK proofs, in terms of roll-ups, being able to deal with the scalability issues and stuff like that. So, centralization has generally come about because of the issues with scalability, but we are still, I think, progressing towards solving those problems without necessarily going to centralization. So I think you've got two sides happening simultaneously, really.
Yeah, and additionally, I will say that all those problems in the crypto world also, it's coming new crypto solutions. Like we see a lot of new projects which coming to help us to solve some of our problems. So it's also, I think, great part of the centralization of crypto world. So, for example, even in Toobit, when we face some of problems with secure or even with decentralization in some new region or new market, we always will find someone like some project or someone who just help us with all those problems. So I think it's also a great chance for companies to produce some new products which can help to solve our problems.
I think there's, if I can just add on to that, on the one hand, I agree that there is centralization with some of the bigger exchanges, but and maybe liquidity to a degree, although you can see the rise of DeFi. But on the other hand, you also see a number of initiatives where exchanges create non-custodial wallets for the end users to own their own keys and their own cryptos. And I think this is a growing trend as well, right? So you've got different ways of looking at that. You've got, on one way, you've got centralization of liquidity through larger exchanges, although you've got DeFi, and on the other hand, you've also got like non-custodial wallets, which are empowering the end users to own their own keys or their own wallets, and then go and source the liquidity onto the exchanges or through DeFi liquidity pools.
I guess Rob mentioned an interesting point. So if exchanges and all that is kind of getting more and more centralized and regulated, right? Even with the rise of the non-custodial wallets, right, and all these things, still, but at the same time, there is DAOs, there is all this decentralization movement which is really kind of not going, in a country with the initial thesis of, digital cash and all these Bitcoin things, right? So that's a very interesting point. Alex, you've mentioned non-custodial wallets, and when talking about non-custodial wallets, the first thing I have in my head is a DEX, right, a decentralized exchange. So do you see them playing kind of a big role here, right? I mean, in decentralizing the crypto finance, let's call it this way, as it's called in our panel. So what DEXs, what roles that DEX is playing? Where are they going? Right? Because I mean, I'm a daily crypto user, and frankly, I'm not using DEXs that often, right? I usually put money on decentralized exchange and do all these kind of things. So
I think they will get to play a bigger role as and when the ecosystem continues to mature. I was thinking more about non-custodial wallets in the sense where large organizations will basically provide services for end users. And then at some point, they want to add another service, which is giving the keys to the wallets of the end users, more in that sense. But to your point, I think there is more and more liquidity that's going to be channeled through decentralized exchanges. We're seeing the emergence of new protocols to facilitate cross-chain swaps. So that will facilitate broader market adoptions as well and liquidity through DEXs for sure.
Yeah, cross-chain swaps, all these things. When I talk to my regular friends, they don't, they kind of don't understand all that.
It's still early stage, right?
They just ask me for they just ask me for my Binance ID. That's the only thing they know. Anyways, so continuing to talk about exchanges and all that, I mean, of course, we come to trading. Trading means stable coins. Stable coins, I mean, they kind of play a big role, right, in liquidity and all these things in crypto. But at the same time, they faced a ton of difficulties, especially last 1 to 2 years, with DPEGs, with loss of trust, and continuous loss of trust, actually, right? Talking about USDT and even USDC, which experienced a lot of problems because of the banks in America, right? So, talking about stable coins, how do you see them evolving, and do you really see them as part of the ecosystem, let's say in 2, 3, 5, 10 years, right? Taking into account that more regulation should be coming in place, and and we should ensure more trust in users, and definitely for regular people, some coin which is called USD something, but doesn't have any kind of a backing. I don't know how to call it in a regular way, right? As people expect it to be. So, where are they going? Will they still be in place? And then, what should stablecoins do in order to stay in the game?
Well, I think that if I may start, the idea that PayPal has launched their own stablecoin. I mean, this is major change, a major shift in the landscape. We've now got really one of the first, in terms of that fintech revolution, the leader of that whole movement is now getting behind and launching its own stablecoin. I think that's just huge, and that only happened a couple of weeks ago, so we're waiting to see the sort of ongoing credibility, I guess, certainly again from the outside observer's point of view, credibility building. And I think also PayPal is usually it's a project that's of interest to kind of everyone here in this industry as well. So from our standpoint, if any sort of fintech company was going to release a stablecoin and launch one and support one, then PayPal's a pretty good one to choose from. I think also the other problems is exactly how these stablecoins are backed, and I think we've learned a lot from what happened in terms of Terra USD. So I think I think lessons have already been learned, and I don't think we'll see those same problems. So I think they're here for a long time until we become more interested in a Bitcoin pegged world, so we'll see about that.
I think we can all agree, sorry. I think we can all agree there is demand with the PayPal initiative, and just look at the traded volumes on a daily basis on CoinMarketCap. Just look at the ranking of the daily traded volumes.
The numbers.
Yeah, it's there, right? And also at our level at Fireblocks, we have supported a number of banks launching their own stablecoins using public blockchains with permission tokens. Again, public blockchains for scalability and security, permission tokens to meet their regulatory requirements. So I would say that there is definitely demand, and the trading volumes are representing it, I think, quite nicely, I would say.
Yeah, I think we can just check the numbers of holders who is just holding stable coins, especially, for example, USDT. So it's all about liquidity, and liquidity, I think, is the crucial part of success of each project. And for example, in Toobit, we provide an effective order book management where everyone can ensure that their assets will be 100% secure, and you can just check all your buy and sell orders, and like all these trade algorithms will help you to see like how it goes, and if it's, for example, it's not stable at the moment, for sure you can just sell it. No need to hold it. So I think it's our life. We cannot just hide it. It's selling that. No, it's not stable. Since even in my friends, all of my like friends who isn't really about crypto, they always, trying to learn about stable coins, and they just trying to invest and to buy and to see how it goes. And when they just see, like, for example, if they invest for a year and it's more stable sometimes than, for example, some fiat currency. So I think it's not bad at all as some news we're just checking, we're just saying like, oh, today USDT is crashed, or it's less users of some stable coins.
I have to say something about what I think about PayPal coin. I think it's an amazing initiative because I think it's actually solving real problems that exist today. For example, about remittance, about sending money. So just last year, I can't remember the amount of money credit unions and all them took for charge from sending money from the US to Mexico, for example. And then what I can do is basically I eliminate the need for remittance. I send it real time. I upload it together with my US dollars that I just bought, and I send it to my family in Mexico. And that's it, and it's all in PayPal coin. I never convert it, and basically then it gives PayPal the power to, do they take markup on this conversion if I withdraw it in pesos or not? But it's amazing because it really solving issues. And regarding stable coins, yes, it's definitely becoming more popular. At GK8, we're actually involved in a few central bank digital currency initiatives as well, taking it to that direction for a second. And that's why we basically build the ability to launch smart contracts to deploy them directly from our core vault. And we see this initiative growing and growing globally. So it's super exciting times in that space.
I think generally, crypto, it's all about to educate and to provide everyone, regardless their experience and all those maybe sometimes bad experience, just to use and navigate with crypto with ease. So I think it's our future, and we cannot just skip it.
I think as a payments company, so Alchemy Pay, we've really seen how stablecoins have changed people's thinking on using cryptocurrency for actual payments. So this is a big thing. If you're putting money in Bitcoin, that's a long-term hodl. But now we're using crypto tokens, stable coins, to actually make payments, and we see it in that way. Okay, this is linked to the price of a dollar. This is linked to the price of the fruit in the shop, the milk, or the whatever. We're actually seeing it in that way, and people are using it in that way. So, for example, we have a white label MasterCard. People fund that with USDT, USDC. With various stable coins, and they feel comfortable. Okay, I have my bags here, my hodl bags, and then this is another way I'm actually using cryptocurrency as a currency and using it for payments. Yeah.
I think, just to echo on that, definitely, I mean, stable coins for payments, it's pretty much a no-brainer. We've built at Fireblocks a payment engine, which basically means that institutions can basically secure the orchestration of their different cross-border payments, choosing an on-ramp provider, choosing a coin to transfer, which often is a stable coin, and then an off-ramp provider to basically facilitate and secure the orchestration of cross-border payments. So from that perspective, stable coins are definitely key in the ecosystem.
That's a very interesting point. Just as you've mentioned PayPal, I just hope that the experience won't, kind of a transition from PayPal to the PayPal coin. Thankfully, I hope so, because PayPal, in my opinion, has the worst experience in the payments market. But initially, of course, the idea was great, right? So they created PayPal as the alternative to dollar, which is great, right? So maybe they will come there finally in 20 years. Yeah. So we have just 1 minute left, but you've mentioned a very great thing, because Bitcoin failed to be a payment method, right? So it's a store of value at some point for people, right? Maybe not for firms as their balance sheets, but it's a store of value, right? But it's not a payment method. And Lightning Network, I don't think is really kind of has a really big, I mean, it's not scaled yet, right? No, I don't see people using it on a daily basis, maybe in some cringe videos or stuff like that. I used it once, yeah. But stable coins, right? So payments is the way where it's really going. It's really nice. I also wanted to mention CBDCs, but we have 20 seconds left, so I don't.
We don't want to talk about
Yeah,
those.
yeah, yeah. Anyways, thanks so much for your valuable insights. I'm really thankful for that. Thanks for watching, listening, and yeah, see you next time.
Thank you.
Thanks very much, Debbie.
Thank you.
Thank you.